Good evening and a warm welcome to all of you all present here. I'd like to begin with myself, Janvi Adzgaukar, on the behalf of my company, Samco Mutual Fund, to thank each one of you all who are there on the call and who've removed time from their schedule. It is our first call about Samco Active Momentum Fund post NFO. Today, the fund has crossed more than 500 crore. So it's a milestone in itself. At these levels of market and the kind of mega events which are lined up this year, how Samco Active Momentum Fund will unfold? This question is going to be addressed by our today's speaker. For that, we have our Chief Investment Officer, Mr. Umesh Kumar Mehta, a CA and has an experience of more than 25 years in capital markets. Alongside him, we have Mr. Paras Matalia, a fund manager, also a CA, having an experience of 8 years in capital markets. Post this session, we will also be conducting a Q&A session. For that, one can submit their questions at the Q&A segment as well. So I'll not take much time and I present Mr. Umesh Kumar Mehta to all of you. Thank you. Over to you, Umesh, sir.
A warm welcome to each one of you. So it has been exciting times in the market. Markets have done what they have done. Momentum has also played well. And so this call is our first update post NFO, what we have done, how we have done, our strategy, where we look, how going forward, where does market look, and where the momentum is. I think all those things that we will cover in this call, I along with my colleague Paras Matalia. So let me quickly begin with my slide. Okay. So today markets are where they are. Markets are slowing down. Given that this is an going forward election is around the corner. Historically, we have seen that in that phase, market tries and corrects, slows down, enters into wait and watch mode. So this is where, so coming to where the markets are, but before, let's quickly recap in 7 minutes, the momentum strategy, what are the levers and what kind of return, what is the historical potential of momentum as a strategy. So now MSCI maintains various indices. They have these two index. MSCI Momentum Index has delivered 18x return compared to the Standard World Index, which has delivered 19x return from 1994. So momentum has a alpha generating potential, and this is recognized by various uh, Nobel laureates, scientists who have done research over past 200 years, and they have identified that stocks with high past returns tend to have high future returns. So this is what momentum is, and this phenomena is visible across asset classes over past 200 plus years. In India also, momentum as a strategy has delivered as a proof of record since 2005. Momentum index, mid-cap momentum index has delivered 50x return, and the standard free float index, mid-cap index has delivered 17x return. So let's quickly recap how we at Samco we have built this strategy. So basically, we have hard coded this so that there is a flawless execution, and this largely contains into three engines: buy, sell, hold engine, that is called signal generating engine, then position size, risk management, and portfolio construction. Here, basically, all the data points that we get from secondary market, we identify the opportunities for buying, selling, or hold. Then once a signal gets generated, how much to buy, and up to what extent of allocation we need to have. That is done by, and the downside protection or the risk management is taken care of by this engine. And then once the portfolio gets constructed, then on a continuous basis, whether to switch, whether to hold, whether to buy, sell, so that gets captured over here. So this is how flawlessly this strategy gets executed. Basically, microscopically, what we check for individual stocks, the stock has to be in uptrend, there has to be a confirmation signal, the stock needs to run faster, the stock needs to have momentum. Stock should not be in a downtrend, stock should not be illiquid or circuit to circuit. We have a basic quality check, and then the stock that we get signals should not have an overextended move. Otherwise, there is no point. So this is how, when everything gets filtered out, all those signals for buying or selling, we get executed through our system. So quickly, the difference between active and passive. In active, the exposure will be during anti-momentum. We will not have equities compared to passive at all points in time. Whether market is in momentum or anti-momentum phase, active will be 100% invested. And second, rebalance. Because we are active fund manager, we will rebalance as and when needed when the stock moves out of momentum. On the other side, passive does rebalancing after every 6 months. And relative and absolute, we follow both, compared to passive, which follows only relative. Number of stocks and the universe, we have no cap. We scan from 750 stocks, compared to passive, where they have fixed number of stocks, either 30 or 50, depending on what index they are tracking. So now let's understand the strategy that we have built in, how we have executed this strategy. So now I will pass on to Mr. Paras Matalia, who will share how we have done the stock selection, the actual stocks that we have bought, when we bought, and the results. So over to Paras. Thank you.
Hello everyone and welcome to the call. First of all, thank you so much for taking out time today. So till now, Umesh sir shared the strategy in a very brief manner. Now let's understand the strategy is what we had explained to you all 6, 7 months back, and now understand where we are in terms of execution, how things have been done in the active momentum portfolio, and let's understand what the portfolio looks like as of the latest fact sheet, which is as of 31st December 2023. You can see there are almost 45 plus stocks in the fact sheet, and there is one stock which is hedged, and the equity exposure in the fact sheet stands at about 83%. So equity exposure is at 83%, cash and cash equivalent at 17%. Now let's look at what the portfolio looks like from the angle of market cap allocation. So currently 28% of the fund is in micro cap stocks, 22% is in small cap, 15% is in mid cap, and 18% is in large cap, while we hold 17% cash and cash equivalents. Let's look at sector allocation now. You can see the top sector in the fund is finance, but if we deep dive a bit more, you'll find that about 8 odd percentages is in REC and PFC, which is basically an proxy play to the electrification or the energy theme that is playing out right now. So the top sectors that we have in our portfolio is basically energy, construction, pharma, realty, and power. So a lot of these stocks, these sectors have been doing well in the past 6, 8 months, and you can see that our fund is actually following the momentum wherever it is, be it micro cap stocks, be it small cap stocks, be it be it any sector, be it finance, be it construction, reality, and that's where the fund is following the momentum wherever the market is taking it. If you look at top 10 names, the highest holding of the fund is in Man Infracore at 6.75%. Man Infra has been one of the most key EPC players in the country. It was known to be the first it was known to be the company that created or the constructed the first private port of India, which is Nhava Sheva. Since last 10 years, the company is now transforming itself into a pure play real estate company where the margins are higher, where the branding is higher, and because of that, the company is going through a re-rating, and which is why it's in momentum. It's also part of your portfolio. Man Infra is also coming up with one of the most iconic residential towers in the country at Tardeo, and one of the most tallest towers in the country known as Aradhya Avan. So that's the story that is playing out in Man Infra, and which is why the momentum is going on. The next name is Swan Energy. The second holding is Swan Energy at 6.22%. And a lot of things are also playing out in Swan. If you are following news, you would have realized that very recently Swan Energy acquired Reliance Naval, which is one of the most best built port making and repairing facility in the world and one of the biggest in Southeast Asia. It is also in the process of, doing a lot of capex to increase their LNG terminal, where in the next 2 to 3 years, there is an expectation that the revenues of the company is going to be increasing by many fold. So a lot of things are also playing out in Swan Energy. We can see the other names that are there in the portfolio, like Ajanta Pharma, like Inox Wind. All these sectors are also in momentum, and these stocks are doing well. There is a lot of tailwinds to green energy, because of which you can see Inox Wind is there. There is also SJVN in the portfolio. So all these stocks are doing really well, and the momentum is, playing out in this industries in this stock. There is generally one myth that when we buy momentum, we are buying expensive stocks, but currently that is not the case. Momentum by itself, as Mr. Umesh Kumar Mehta explained, that it is investing in stocks that are going up and exiting the stocks that are going down. So not necessarily always expensive stocks do well. We know that since last 1.5, 2 years, PSU stocks are doing well, realty is doing well, infra stocks are doing well, and those stocks are usually cheaply valued. And because of that, currently, the portfolio's PE ratio and PB ratio is cheaper than the benchmark, which you can see that active momentum funds PB ratio is 5.98 compared to benchmark 6.63. The PE ratio of active momentum fund is about 27.64 times, while benchmark is at 30.36 times. So currently the momentum is in cheaper stocks, cheaply valued stocks, and that is why the portfolio is also tilted towards that. It could happen in the future that growth stocks or expensive stocks come into play, come into momentum, and things could also look like that the portfolio is expensive than the benchmark. But the point that I'm trying to make here is that momentum does not necessarily always mean investing in expensive stocks. Whichever stocks are doing well in terms of price performance are in momentum and would usually be taken in the portfolio. So this is a very small portfolio update, what the portfolio looks like today, what are its, valuation ratios. Now let's understand few key advantages of Samco Active Momentum Fund. Now, one of the most, unique or biggest advantage that we can say is that this algo is helping us discover a lot of hidden gems that we'll look at ahead. There are few stocks that have become multi-bagger since the launch of our fund, and we've taken them in our fund. We have no human biases involved, because of the algo, the human biases, go down to next to nothing. Fourth, a lot of liquidity parameters are configured in the algo, which helps us invest in small caps and micro caps while keeping in mind the liquidity aspect of it. And last, that it efficiently captures momentum, which we'll see where the momentum is in the markets currently, and is our portfolio aligned to where the momentum actually is. So now let's talk about first advantage of the Samco Active Momentum Fund. It is discovery of hidden gems. Now, what do we mean by hidden gems? There are two things here. So there are four stocks in the scheme in the portfolio that are currently not available in any actively managed mutual fund scheme. So Samco Active Momentum Fund is the only fund which has these four stocks, and no other actively managed fund will have these, because we are following momentum, because we are chasing momentum. These stocks have been in momentum and part of your portfolio, while you are not getting these stocks anywhere. For example, Datamatics, Tips Industries, Parag Milk Foods, and Sarda Energy. If you look at the return of these stocks past 1, 2, 3 years, you will be flabbergasted that, for example, Tips has gone up by almost 20x in last 2.5, 3 years, which is a phenomenal growth for a stock. And Tips has a library of almost 30,000 songs on which it earns royalties. About 75% of Tips revenues come from digital platforms like YouTube, LinkedIn, Facebook, TikTok, and whatnot. So whenever someone plays a song which is owned by Tips, they have to provide a royalty to Tips. They have to pay a fee to the Tips, or else they can sue them and recover their fees. So Tips is at a very, very good point where so much YouTube consumption is going on, so much digital consumption is going on, and these songs that are refurbished and made remixed and used in so many other formats, all of these revenues flow back to Tips. So this is a very good opportunity for Tips to do well even in coming times. And let's take another example of Parag Milk Foods. Parag Milk Foods is also kind of trying to turn around its business. It's been able to bring a CEO from Amul, and they are trying to do a lot many things in their business. So when we talk about hidden gems, there are also many stocks in your portfolio where analyst coverage is zero or next to zero. So these are the names of stocks that almost no analyst has coverage on, be it Man Infra, be it Swan Energy, be it Adani Power. Adani Power is one of the stocks which is most cheaply valued power stock when the entire industry is doing well. A lot of stocks are valued at a PE of 15, 20, 30. Adani Power is still trading at a PE of 10. To give you one more bit of information, Adani Power was the first stock of the Adani pack to go above its February 2023 levels, where, because of the Hindenburg report, the stocks had fallen. Adani Power was strongest of the pack and was able to reach its previous high very quickly, and was able to go even beyond that. So there are a lot of such names here which are not covered by analysts, which are not part of other mutual fund schemes, and this is where a big advantage to you and your investors are, that they are getting exposed to opportunities where no other fund is there, where not a lot of discovery has already happened. They are not well researched stocks, and that's why the size of opportunity is comparatively relatively bigger than where, other stocks name are there, where it is already discovered, already researched, and are trading probably near their fair value. Next big advantage is basically momentum multibaggers. There are four stocks that whose signal came after our inception date, which is 12th of July 2023. You can see these stocks, the buy signal date is mentioned, buy signal price is mentioned. These four stocks have gone up more than 100% since the inception of fund, and are also part of the portfolio. They're 100% up from their signal price, and for example, Cochin Shipyard is up by 152%, SJVN is up by 145%, Newgen Software is up by almost 130%, and Inox Wind is up by 118%. So these stocks have performed phenomenally in last 6 7 months, and is also part of your portfolio, and we have been contributors to the performance of the fund. Next, these are three stocks that have done really well, which have, generated return of more than 50% since their signal date. And you can see those are PFC, which is Power Finance Corporation, Man Infracon, and Nippon Life Asset Management Company. Next is no biases. Whenever we are trading in the markets, we are investing in the markets, almost all of us are subject to some or other biases in, different time, in different periods of time. There are times when, we don't like PSU stocks, we don't like infra stocks, we probably don't want to invest in companies that have, extremely, low growth. All these biases generally lead to missed opportunities, generally lead to lower profits, lower stocks, and a higher losses. Us humans, whenever we talk about investing, it is very important. It's not just about intelligence, but also about emotional intelligence and temperament. A lot of great investors have said that investing is 10% about intelligence and 90% about temperament. So using Samco's proprietary momentum seeking algorithm, there are some advantages. One of the biggest advantages we have is that the biases, our own biases that we have, are to a great extent kept out of the investment process. Let's look at a few examples for this. Now, this is an example of Cochin Shipyard. We got a buy signal after Cochin Shipyard made an all-time high breakout and then failed. So a technical analyst or someone who reads charts would probably think that this is not the right level to buy. The stock is likely to reverse from here. And I am assuming few of you all who are attending this webinar, you also are traders, and you would have also thought that, oh God, this is an all-time high breakout failure. This is not a good time to buy the stock. Stock would ideally reverse from here, but what happened? Let's find out. The stock then went up by 140% till January 10th. And you can see that the all-time high breakout failure was there. It stayed there for some time and then really bounced from there on. So if we had allowed our biases to creep in and not invest in the stock, then we would have missed out such a big opportunity, such a big up move. Next example is Tips Industries. You can see the stock went double in less than 4 months, and then the algorithm gave us a buy signal. Now, as an investor, as a trader, what would be your feeling? The stock has doubled, so the stock has moved up so quickly in such a short period of time. Would you be willing to invest in the stock? It becomes very difficult to push the trigger for a lot of investors, for a lot of traders, that the stock is already moved up a lot. Should we go and invest at these levels? But you can see post that the stock is up by almost 26-27%. Even today, the stock was up by almost 5-6%, and it's been doing well since the time we got a buy signal in the company. Next example is Inox Winds. Again, similar story. The stock doubles, in less than 3 months, and then we get a buy signal. And one more key thing to note here is that the after we get a buy signal, after we start buying it in the portfolio, the stock does not go anywhere. It's just there for almost 2 to 3 months. While other markets, the broader markets were soaring like anything. So again, a lot of biases, emotions creep in, that was this the right decision to buy? Is the algorithm working well? Or some investor would think that the stock has already moved up now, probably it will not go anywhere for quite some time. But because we are following the algorithm, it helps us give a lot of conviction to ourselves that no, on a statistical basis, the algorithm is doing extremely well. We should follow it, and that is why we did not hold our biases, and the Inox Wind stock then soared like anything. It doubled from our signal price very, very quickly in a very short period of time. And that is why, not having biases or limiting our biases helps us to do better for our investors, and even us as individuals. Next example, again, a similar example of Newgen Software. The stock doubles in a matter of 6-7 months, and then we get a buy signal. But then again, from that as well, the stock keeps on moving up, making investors wealthier. And even from our signal price, the stock is more than doubled, and you can see the up move of the stock is so consistent and so fast that generally it does not provide chances for investors to get in again. So this one big advantage is that it helps us to not have biases. It helps us to, protect ourselves from biases as investors and as traders. Next, biggest advantage, even if you look at any other momentum fund in the industry, you'll find that Samco Active Momentum Fund is chasing momentum, is finding momentum actually where it is. Let's find out where the momentum has been since last 6-7 months, since the launch of our Samco Active Momentum Fund. So you can see that from 12th of July till 15th of January, my Nifty Microcap Index has given the highest return at 44%. Small Cap 250 Index has given a return of about 30%. Mid Cap Index has also given a return of about 30%. Nifty Junior has given a return of about 24-25%, while Nifty 50, which is the biggest 50 companies by free float market cap, has given a return of only 10%. So one thing is very clear here, that the momentum is in the micro caps and small caps and mid caps. So do our portfolio align with this? Align with this? The answer is yes, because the fund's biggest portion is in micro cap stocks, which is at 28%. Next is held by small cap, which is at 22%. Next is held by large caps at 18%, and then mid caps at 15%. So you can clearly see that about 50% of the portfolio is in micro cap and small cap, where actually the momentum is there, and that is why the portfolio is also aligning towards towards that. So the biggest benefit of not having any restrictions as to that we will not invest in large caps, we will not invest in small caps, is not working against us, but it is helping us. So it's a truly flexible policy, where wherever the momentum is, we are following. We are market cap agnostic fund, so wherever the momentum is, we follow. Now let's understand where the momentum has been in terms of sectoral movement. You can see in the chart that Nifty Realty has given the highest return since 12th of July till 15th of January at almost 67 70%, followed by energy at about 38%, followed by Nifty IT at about 28%, followed by pharma, and then metal. So you can clearly see the highest momentum is in Nifty Reality, and second highest is in energy. So do we have those names in our portfolio? The answer is yes. You can see this is sectoral allocation. If you see, as I had mentioned earlier, the finance which is showing us 14%, majority of that is basically REC and PFC. Almost 7-8% is REC and PFC. And those stocks are basically a proxy plate towards the electrification of country and towards the energy sector. You can see that the second highest and fourth highest name is basically construction and reality at almost 14-15% of the portfolio. Third highest is pharma. Fourth highest is again industrial products and power. So you can see sectorally as well, the portfolio is very well aligned to where actually the momentum is in markets. Now let's analyze top 10 names as well, because we do have those names, but is the weight behind them or not? Is the weight actually where the momentum is or not? So you can see again, the top name is Man Infracon at 6.75%, which is a reality company. And we know, we just saw that Nifty Reality has been the biggest gainer in last 6-7 months. Next is Swan Energy, which is basically an energy as well as real estate company, which very recently acquired Reliance Naval, and a lot of revenue of the company is going to be driven by defense in over the next few years. Third is Ajanta Pharma. We saw that pharma was the fourth biggest gainer in terms of sectoral indices. And you can see in the top 10 other names include energy stocks like Inox Wind, REC, PFC, pharma names like Ajanta Pharma and FDC. We have one name from the metal, which is Ratnamani Metal and Tubes. So the portfolio is very well aligned with where the momentum in the markets is. So these were the advantages that Samco Active Momentum Fund is having because of its proprietary momentum seeking algorithm. Let's just quickly revise them. So first is basically we are able to discover hidden gems where we are investing in stocks which probably no other actively managed fund has. We have invested in stocks where there is less research stocks, which is not discovered by a lot of people yet. Second advantage is that we have very less biases creeping in. We are following the algorithm, so our biases in terms of investments is very less. It's stopping us from making mistake, and it is helping us to follow a statistically proven strategy. Next is that we are actually able to follow momentum wherever it is, be it market cap wise, be it sectoral wise. And these are these big advantages that we have because of the Samco's proprietary momentum seeking algorithm. Now, moving on to the next thing, we are very excited to say that we are reopening our fund on 31st of January, and to take fresh investments in the fund, be it lump sum, be it SIP. It's very important for us to understand why this is the right time, right? So let's look at the Samco Active Momentum first. Fund's net equity exposure. You can see that we've gradually increased our equity exposure till November 2023. Then the equity exposure fell to 70, so almost 80% in December, and we are further in process to reduce our equity exposure because we see there is some sort of extremes in the market, some sort of fatigue in the market, and that is why we are able to adjust our portfolio on a real time basis. Wherever and however the markets turn, our portfolio equity exposure is also getting changed as and when the market's momentum keeps on changing. So let's understand how taking inflows right now is going to be a win-win for existing investors as well as the new investors come in. So currently our fund size has crossed 500 crores of AUM. Out of that, about 22% is in cash and arbitrage, while 78% is the net equity exposure. Assuming we are able to garner about 500 more crores of inflows, post inflows, the equity exposure will fall down to 40%, which means that investors are coming in a fund where the equity exposure is not at 100% or it's very aggressively invested, but it is at 40%. While existing investors do not have to sell their winning positions or do not have to trim their equity exposure by selling with incurring brokerage costs, but just by having additional inflows in the fund, the equity exposure will go down. So this creates a very unique win-win situation for existing investors as well as our new investors that we are expecting would participate. So this this shows that the fund is able to, create a win-win situation for both. But let's also understand why this strategy should do well, or India as a country should do well. So the first factor that is going to work in the favor of markets is basically favorable interest rate scenario. We can see that from 2022, Feb 2022, it was one of the fastest interest rate hikes in last 40 years, which was a very steep rate hike that we witnessed. But now, since last 2 3 Fed meetings, the Fed has not increased the rates. So this, amounts to a pivot where the interest rates have stopped rising. So this generally creates some sort of optimism for businesses, some sort of optimism for market participants, and we might be expecting a rate cut probably in towards the end of 2024 or to the beginning of 2025, which the markets generally discount it 4 5 6 8 months before it actually happens. So one of the biggest driver for us as an economy is also going to be low interest rates, or probably not rising interest rates further. Next, the biggest advantage for us as investors in the Indian stock market is that we are going to be the fastest growing large economy for next 2 years. This is a Mint article where you can see that India is expected to grow at 6.3% for next 2 years, and that is one of the fastest growing large economy in the world, with a lot of certainty, with lot of stability, because of government policies remaining the same, because of a big base for consumption. We are a population of 1.5 billion people. That also leads to a lot of attraction of capital in the country. Another source, IMF also projects that Indian economy is expected to grow at 6.3% for next 2 years. So growth wise, we are taken care of. Now let's understand how certain we are about this growth. So the growth usually depends on the government policy, the stability in the country. There are a lot of articles which say that BJP's win in general elections of 2024 is almost inevitable. So there is also one term that is going around called, this is the India's Tina moment. Tina means there is no alternative. So basically, there is a lot of certainty for investors that the BJP government will return to the power, the ruling government will return to the power. And what makes more, whenever investors put money in a market, put money in a business, they want to know that there will not be drastic changes in the government policies, drastic changes in business policies, and which is what is expected to unfold in the next year. So the ruling party coming back to the power gives us a lot of assurity that their policies, like green clean energy, investing in defense, investing in a lot of infrastructure, will remain, and will keep on going on for at least next 2 3 years. And that kind of certainty will attract a lot more capital from within the country as well as from outside the country. So initially we learned that momentum strategy has been tested over 215 years. We can clearly see that momentum is such a strategy that works really well in the long run, which helps investor compound their money. And also from a macro point of view, we are very much covered that, for next 2 3 years, we see that India as a country should do extremely well compared to other large economies, and we are going to be the fastest large growing economy. So this all of these things, put us in a very bright spot in terms of, markets probably doing well over the next 3 4 years. So this is a good time for investors to come and invest in active momentum fund, because the markets have softened a bit. We might see some kind of softness probably in the markets due to elections, and due to some sort of volatility due to elections across the globe, and some geopolitical situations also going on across the globe. So very happy to announce the scheme reopens for subscription on 31st of January. We are hoping, and we are submitting our humble request to you all to please do support us in this reopening of the scheme. Just a quick recap that this scheme is managed by Mr. Umesh Kumar Mehta, who's the CIO and co-fund manager with me. As Janvi said, Umesh Kumar Mehta ji has an experience of almost 25 years in the capital markets. He's been associated with the Samco group for more than 15 years now. He's our mentor. He's our guru for everything markets. He's someone who would, go to the library, study hundreds of years of history, and then come and teach us what might happen next, what might happen, what might not happen. So a lot of learnings, a lot of insights, a lot of vision, flows from him to all of us at Samco Mutual Fund. A quick introduction about me. I've been with the Samco group since last 6 years and started my career here as an equity research analyst. I'm a chartered accountant and very happy and humble to be part of the AMC group and hoping to do really well for our investors. Scheme features are such: benchmark is Nifty 500 TRI, minimum SIP amount is 500. It's a thematic scheme with momentum theme. Minimum lump sum amount is 5,000 and exit load is 2% in the first year. This is the standard product label and riscometer. It's an open-ended equity scheme following the momentum theme. So thank you so much that you all listened to us very patiently. We'll be more than happy to take any questions, any queries, any doubts that you have. And I hope that you take a lot of clarity from us today here, which you can pass on to your clients and hope we make a lot of wealth for our investors.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.